my year, yeah.
All right, good morning, everybody. Happy Thursday. Welcome to the morning show here on Stock Market TV. It's the best morning show in finance. I am Spencer Israel here with JC Parets and Steve Strazza. What do you want to talk about today? Does it start with in and end with Nvidia? Probably. That's what I'm thinking. Another blowout quarter. Of course, we'll talk about that. We also have some recap slides. If you missed JC's conference call last night, I'm not sure why you missed it, but we'll have a little bit of a teaser of that for you. Just a couple. Not going to give away all the secret sauce, but just a couple of slides from that. Guest today is Mike Singleton from Invictus Research. He'll be on in about 20 minutes or so. We'll have Kimmy Sokoloff. We'll have Sean McLaughlin. And that's the show. What up, chat? Smash the like. Let's go.
Morning there, Mr. Spencer. I see you giving people a hard time for missing the conference call last night, but my understanding is that you missed it yourself.
I did miss it myself. I just Scout's honor, whatever the Scout symbol is. I had to go look at a townhouse, unfortunately. So
why are you fronting? You're abusing people who didn't make it. You didn't make it yourself.
I know. I missed it. Well, that's why we're gonna have a touch of a recap this morning. I'm hoping for the schmucks like me that weren't there.
For the record, a lot of people watch it after the fact and don't make it live. I mean, we got people like in Europe and around the world that just 6 p.m. Eastern time is just not convenient, as it wasn't for you apparently.
Yeah. By the way,
but the archives are there. By the way, the archives are there going all the way back to 2015, which is really, really cool. You could literally go back and watch any conference call going back. How many years is that now? 7, 8. It's a lot.
People in chat commenting on my shirt. Steve, this is what I was talking about when I was thinking about you over the weekend at Target.
You guys won't shut up. I was just going to say that's what I want to talk about today. This shirt.
this is
Spencer.
When I told you that I was thinking about you buying new shirts, this is the shirt that I was referring to.
Do you understand how tomorrow's Crypto Friday? The orange is for tomorrow, bro.
Meet me in Miami. Let's go, Spencer. Right. I love it. You know, in Nvidia earnings report like yesterday's, we'll bring out all the bull market shirts.
That's right.
I don't know what JC's doing over here.
That's right.
Records, right? We're breaking records. Get it?
Oh,
nice.
Oh, all right. Well, shall we get down to business, gentlemen?
Let's do it.
It was quite the doubleheader last night, going from the Nvidia earnings call to the All-Star Charts conference call.
What's that guy's name? The Nvidia guy?
Jensen Huang.
Yeah, that guy's got nothing on me. Our conference call was way better. Are you kidding me? Come on. Come on. Let's go. Hit it.
The Nvidia one was definitely drier. I'll tell you that. All right.
You were charged. Well, why don't we take a look at some of the things that we talked about yesterday on the conference call? Why don't you throw up there the first slide? What are we seeing? We're seeing the Dow Jones Industrial Average really below that overhead supply, and that continues to be a theme in the market, particularly at the index level, where we're talking about these indexes and some of the most important sectors, for that matter, stuck below overhead supply in a lot of these cases from the prior cycle's peak. And that's the Dow Jones Industrial Average. And it's had a heck of a run off the lows. It got within, 4 or 5 percentage points from new all-time highs, but it still got work to do. Still has work to do. Same thing with the Dow Jones Transports. Why don't you take a look at that? So these are the Dow Jones Industrial Average, Dow Jones Transportation Average. Again, stuck below that overhead supply. This is the type of market environment that is much different than it was in the first 6 months. Volatility's a little bit higher, a lot higher, depending on how you look at it. Not historically high, but certainly much higher than it was. And we're incorporating different types of strategies in this environment than we did in the first half of the year. And we talked about some of those strategies yesterday, both on the show and really went into detail on the conference call last night. Why don't you keep going and look at the S&P 500? This does not include yesterday's action, but nevertheless, stuck within this range, below 4,600, above 4,300, stuck below those former highs from early last year, holding above the former highs from the back half of last year, kind of just in this range, stuck below this overhead supply. Again, reiterating what we're seeing in some of those other charts. And I want Strazza to weigh in here when we get to technology, but I just want to reiterate the time of the year that this is happening. Go ahead and just punch that up quickly there, Spencer, just to remind everybody that this is a market environment that is supposed to be struggling, that is supposed to be messy, that is supposed to be range bound, where volatility is supposed to be slightly elevated, particularly when you compare it to the last 3 quarters when it wasn't supposed to be any of those things. Volatility was supposed to be low. Stocks were supposed to be going up. And all of those things happened. So there's no signal here. The market just continues to behave the way it's supposed to behave. And then look at healthcare and technology. These are the largest components of the S&P 500 and the Dow Jones Industrial Average for that matter. And both of them are within a sideways range. So if you're wondering where the indexes are going, if you're wondering what the catalyst will be to get them going again, look no further than these 2 sectors. Together, they represent almost half of the entire S&P 500 and the Dow Jones Industrial Average. Huge components. And then, Straz, I want you to weigh in here. Take a look at the NASDAQ. Stuck below this overhead supply. This is the NASDAQ 100. Stuck below those 380 levels. And then one more. This is the Technology Index XLK. Once again, stuck below that overhead supply. And Strazza, is this the savior? You want to go to the next slide there? Is this the savior? Nvidia came out with earnings last night. My understanding is they're making $200 trillion a quarter or something like that. And the stock is making all-time highs here in the pre-market. Why don't you tell me if you think that this is going to be the savior? It's going to take technology much higher, especially with the QQQ still around 372, holding below that. So talk to me. What are you thinking?
I mean, we talked about this, right? The last 2 days now, that Nvidia could make a save for maybe the whole sector here. If you look at tech more broadly, right, Nvidia is going to open at new all-time highs. Looks like it's poised to add over 100 billion in market cap since yesterday.
Oh, is that all?
Which actually pales in comparison. I joked in the chat like they just added a Goldman Sachs in market cap. They did 250 billion last quarter. So the question becomes, can the rest of the space, keep working off of Nvidia's performance? We'll see. Do you want to go over? I think we should go over that list of, because we had a question in the chat, that list of like sympathy plays.
For the record, Nvidia only represents 5% of the technology index for those keeping score at home. This is compared to 23% for Apple and 22% for Microsoft. Again, Nvidia only represents 5%. So essentially, Nvidia is 1/10 of the size of Microsoft and Apple combined with respects to the technology index.
So I guess to answer your question, JC, and to that point, Nvidia is not going to be able to break the NASDAQ or tech sector spider out above this overhead supply by itself, right? It's going to take more than just Nvidia. So we'll see.
It's going to take Apple and Microsoft. We did sell naked puts on the old Microsoft yesterday.
I feel like I'm having a brain fart. Are those indexes? They're not rebalanced. They're rebalanced like quarterly, right? They're not rebalanced constantly.
I'm pretty sure this is a daily.
Or is it daily? Oh,
pretty sure it's daily adjustments.
Okay. Then in that case, maybe it can.
I don't know. I don't think they do it daily, but I don't know.
I mean, I look at the components daily, and the numbers are always different. So
okay,
because the stocks are moving,
right?
Anyway, the rest of the market has to keep working, right? And to be fair, right now it is right. Coming in this morning, NASDAQ's up. Last time I checked, more than percent. What are we doing?
94 bips on the NASDAQ 100 futures.
1%.
Microsoft's working. They all look good this morning here. Apple looks like it's going to print a major little bear trap here. Little bull hook.
A major little bear trap.
Major little bear trap.
How can it be a major little bear trap? It can't be both.
was-
It can't be
it was
major
so
and
short.
little.
It was like a day or two. Little
I think a good chart to show what Strazza's talking about. The rest of the market's going to have to go. Take a look at slide number 11 there. You want to talk about the rest of the market, non-growth, non-technology, quote unquote, the rest of the market. Look no further than the U.S. industrial sector, also stuck below those prior cycles highs, right? Very, very similar. Key Fibonacci extension, very similar, stuck below those levels. I think we're all in the camp that this ultimately resolves higher. I think technology ultimately resolves higher too. The question is, how long is it going to take? I've learned to be patient around here. Had to learn that lesson the hard way, Strazza. Had to learn that lesson the hard way.
So in the short run, and like based on yesterday, right, one of the bigger companies in the world just reported one of the best earnings reports ever, and they represent this whole new, bull market megatrend revolution in artificial intelligence. They're the gatekeeper and really poster child of this little movement we have going on here. Is this going to be enough to break us out above these former highs and get through this overhead supply? We'll see. Or like you said, JC, does this take weeks and months to keep kind of grinding before we break out? I don't know.
Nvidia right now, the 5th largest company on the planet, quickly approaching Amazon status to be number 4. But Nvidia, top 5. Strazza, how about that, huh?
Probably the 6, actually. I think Saudi Aramco's up there too. They're not.
I was just thinking,
are we including that as a company? Is that a thing?
Guys, it's so impressive what these guys have done. I mean, this was a company that was mid cap early in my career, even small cap at times. I think they were making graphics chips for computer video games, right? Like a really niche company. Now they're taking over. They are literally in charge, industry leader in this new megatrend.
Can you throw slide 10?
Critically important now global company. You know, we talked about yesterday how there's this talk about not allowing them to sell chips to China.
Yeah,
a company that made computer like graphics chips not long ago.
They talked about that on the call a little bit. Yeah.
Look at these Fibonacci extension levels. I mean, we're using Fibonacci extension levels that we've never used before, right? We're really going out there on that sequence, aren't we?
I didn't even know the sequence went this far. Just kidding.
The sequence goes to infinity, young Spencer. It goes to infinity.
Okay. All right, real fast. Let's actually go over these numbers here for a second on Nvidia. Sure. So let's rewind the clock back to
their sales doubled in 3 months.
Oh, we're talking about the earnings? I thought you were going to talk about the Fibonacci numbers.
This is one of the biggest companies in the world. Just went from like 7 to 14 billion.
Yeah. So remember 3 months ago, right? It's May 24th to be exact. Nvidia comes out and they said, we think that for the current quarter, for the May quarter, we'll do around $11 billion in revenue. And everyone's like, what? That's insane. And some people were like, they're not going to do $11 billion in revenue.
No, everyone knew they were going to, and that was
right. Didn't they do 14? I'm no fundamental.
That's my point. They didn't do 11. They beat it. They crushed their own crushed number. They ended up doing, it was 13 and a half, JC, $13.5 billion in revenue in just last quarter alone. And, by the way, for the current quarter, they think they're going to do 16. And just to put that number in context, that's more than they made in all of 2020. So,
but the street was at like 11.2, right? The estimates at least, but the market was really at like 12 or 13, I think. And they still came in and beat all those expectations. Here's the thing. If the market actually thought that Wall Street's estimates were right at like 11.2, then coming in at 14, stocks should have been up a lot more than 6, 7, now 8, 9, 10%.
Yeah. Why don't you zoom in, Spencer, on the other chart, the shorter term chart? People are like, well, how do you trade this then? Number one, first of all, you don't have to trade it.
This one?
First of all, right? It's not like
I wouldn't trade it.
Gun to your head that you have to trade it one direction or another, right? Realistically, you don't have to do anything you don't want to do. So that's number one. Number two, on a gap and potential gap and go like this, I would use the lows of the day and trade off the lows of the day, kind of maybe let it dance. Like if you're really just swinging short term, I'm looking forward to asking Kimmy about this, but on something like this, you know, you want to take the lows of the day and trade against that if it's going to be a gap and go. So if you take out the lows of the day, all bets are off. Maybe it's a fade. Maybe it opens at the highs and then fades. If you're looking for a short, the high of the day will be the trigger, right? So if you're looking to short it, you take the high of the day, 15, 20 minutes in, 5 minutes in, whatever. And then if you make a new high, you stop yourself out. If you're going to go long and you want to gap and go, you take the low of the day. And if it makes a new low, you stop yourself out. You know, those are two possibilities. It could be a choppy day, in which case both of those strategies are wrong. I'm not going to trade this thing. I don't really see anything here. I don't really see a strong edge. If I were day trading today, which I will not be day trading today, but if I was, this is a prime candidate. And those are the two ways to do that, I think. Any other thoughts there?
Yeah, this is the last stock I would ever day trade. This is not a stock you day trade. This is a stock you.
Why wouldn't you day trade this stock? Why is it the last stock?
Like, what is the last stock in the world you'd want to day trade? I would say Nvidia.
But why?
Dude, it's in the news every morning. Give me a break. That is such a headache. You don't need that. There's other stocks you can trade. This is a stock that you just buy and own forever.
This stock does have juice.
Okay, these are two completely different conversations. You can buy it and own it forever. It has nothing to do with day trading. It just came out with earnings. It's going to be moving all over the place. It's the perfect stock to day trade. Not to mention it's a high price stock. So this is literally the sheer definition of the best stock to day trade. How are you telling me that this is the last one?
It depends on your definition of what a good stock to day trade is.
One that moves. A high price stock that moves is the best stock to day trade.
We don't want to be in stocks that have headline risk, news risk, and are constantly, analyst upgrades moving all day on different things. Nobody wants
on
that.
An intraday basis.
Stay away from stocks that have earnings. Same reason I would stay away from something like Nvidia.
Fine, but they already reported earnings. That's over.
No, you're missing my point. It's like every day is earnings for Nvidia. Spencer, you get what I'm saying? They're in the news every morning with a new upgrade or downgrade.
He's saying that the stock has a lot of juice, which it does. That there's a high beta here, frankly, and it does move.
And it's a high price. It's the perfect day trading stock. How are you telling me this is the last one?
It's probably second to Tesla in terms of just sheer number of headlines out there about this company and stock every single day. So,
I'm gonna call 3 of the top day trading firms in the world this afternoon, and I'm gonna ask them. I'll be like, "Hey,
I'm not picking a side.
Day trade, and I'm gonna see what they have to say."
I'm not picking a side. I'm just
sure you're gonna get different answers from different traders.
I'm pretty sure I'm gonna get a strong yes from all 3 firms, but we'll see.
Dude, the people, the traders on stock twits, I don't know where you're going, but they're trading stocks like Tesla and Nvidia. That doesn't mean it's the right thing to do. A lot of people trade these stocks for sure.
I'm talking about professional day traders, people who do this for a living. I'm going to ask them if this is a good stock to day trade or if it's not. And I'm going to see what their answer is. My suspicion is they're going to say, that's the perfect stock to day trade.
I'm sure.
By the way, that's who I learned this from.
I'm sure 90% of the day traders there will trade it. And they're probably the same 90% that you see the turnover in.
Well, regardless, everyone's going to be in this stock today, or they're going to try to be. All right, right. That's because we're going to open here up 10%. And I know that stock price is a meaningless way to judge the value of the company, but just to
excuse me,
like just to have bear with me for a second. All right, 2 years ago, Nvidia was $800 per share. Okay, and then they did a 4-for-1 split. And now, 2 years later, they're more than halfway back to where they were pre-split price, right? Yeah. So it boggles the mind to think about. They cut this stock in quarters, okay, and we're almost back there, frankly.
Yeah, good. Well, it's on an uptrend. I don't know what boggles your mind about that. It's perfectly normal.
Moves like this are not normal. Not that it's a bad thing. I'm not making a judgment on.
It's normal for a stock like this in a strong uptrend. How is this not normal? This is what this thing does. In fact, what it did overnight is much less than it did the last time. So if you're telling me that this isn't normal, then what about the last earnings?
What is not normal is the numbers. It's we've never seen something like this. Not normal at all.
Yeah,
performance.
I mean, the
I'm
fact
pretty sure if you adjust for inflation and you go back throughout history, we've seen it before.
A handful of companies would make the conversation, but we've never seen companies of this size grow at these growth rates since technology. Actually,
All right. That's fair. That's a fair point. All right. See, Strazza coming in hot with the truth. That's a valid point.
tech
Of
stocks.
this magnitude of market capitalization. That's a fair point.
Some of these tech stocks have been like rewriting the rules, of how much you can keep growing.
Can
you imagine being a value investor in an environment, like trying to like come up with a value for this? Are you kidding me?
I was
Dumbest thing I've ever heard.
Shout out to C. Marie in the chat. Bought Nvidia at $26 in 2017.
So
drinks on you.
So I was talking to somebody this morning, right? And just really high level. So their sales go from 7 to 14 billion over the course of 3 months, right? Big number. If you look at their earnings, though, because the operating leverage this company has, just year over year, earnings are up 900%, right? So you could see the power of that sales growth, right? Where do we go? Where are we this time next year? Do we double again? So are we at 30 billion a quarter? Do we eventually quadruple? Like, what is the size of this market? And that's what the stock chart reflects. People trying to figure that out.
Yeah.
We have no idea. So
all bets are off.
Hold on. Let's talk about some of the other semiconductors that are getting a sympathy bid before we bring on Mike Singleton's going to be our guest today, right?
Yes.
All right. So we got the Dow futures slightly down 50 points. S&P futures up 40 basis points. The NASDAQ futures up 1%. Bonds down slightly with interest rates inching higher. Gold down 30 bips. Silver down 75 bips. Copper down 1%. Crude oil down 40 bips. Natural gas down 260. And then the dollar higher with the euro and the yen falling slightly. And the VIX slightly lower with interest rates creeping higher. So let's take a look at some of these others. Broadcom, it's up almost 3% here pre-market. AMD up 1% pre-market. ASML up 50 basis points. Taiwan Semi up 2.5%. Any other big ones?
Yeah. So basically, this is what you do. You go
to the image that I sent in the chat. They listed a number of companies on their report.
You go, yeah, okay. I'll get that up in a second. You can also just go to Google, type in SMH ETF. You go to that. You click on the holdings. You see what the holdings are, and you look at all those stocks, and they're all going to be up today, right?
Nope,
even
not Intel. Intel's down.
No, I said even Intel. I suspect is going to be a bit up at the open.
Nope, just down. That's how much of a piece of shit Intel is. What a piece of hot garbage that company is.
If you're watching the market closely for whatever reason, whether you're writing about it, you're an analyst, you're a trader, you're an investor, get some sort of software. There are free websites that you can use to kind of do it, where you can throw in a ticker of a fund and just immediately pull up the holdings. Like I use TC2000, I could just punch in SMH. I can see all the holdings. I have scripts, performance.
Koyfin.
Just
Koyfin does
a powerful tool,
Yep.
but you need something like that. Try.
Yeah. So these are all companies that were highlighted in the report that are using Nvidia's stuff that they highlighted, right?
Look at the top two. And this is it. And this is what we've been saying, Spencer, for 2 quarters now. We've been talking about this Nvidia stuff a lot. And people don't like this answer because it's not sexy, but it's the mega caps. Who wins from AI? The same companies that won from the internet.
Google, Microsoft. Yeah, they're not pure plays because they got so much other shit going on.
Yeah.
But like, so if you're looking for the pure plays, the quote unquote pure plays, they're struggling. It's the companies that Strazza just mentioned, these mega caps. They're the ones winning. It's not a pure play. They got other things going on, but too bad. Suck it up. Deal with it.
Tech is hard, and if you talk to some of our smart friends out on the West Coast who work in this industry, they'll tell you like the position of power that these companies in is crazy. And this is a great example, right? Because it is kind of a liberty to be able to go and invest in AI right now. This is expensive, right? You have to already have a formidable business and money to go spend on R&D. Google, Microsoft, Amazon, all day. They could try things that don't work over and over and over and over again until they find one that hits. And that's what these companies do.
Yep. So yeah, broadly speaking, every tech stock is going to trade higher, but specifically the chips, right? So find a tool that can help you go through ETF holdings or help you find similar peers, because it's all relationships. Some of it is forced too. I mean, like these ETFs are so large that like the peers have to trade higher, right? With Nvidia, for on a deal like this. Stock market, Mike making the same point, Strazza, that you made last time around. After Nvidia had the best day for any stock in history, that it actually got cheaper, right? The multiple got it got cheaper on a PE basis because of the power of the earnings.
We did a Twitter Spaces, remember, to make that point very, very clear, because a lot of people missed that, and we'll have to check. We'll check the math, but I'll bet that's the case again here today.
Sure, it happened again.
Yeah. It's not crazy expensive. Depending on how far you go out and what EPS number or earnings number you want to put on this company 2 years out or whatever, you can come up with a very reasonable valuation for the stock right now.
By the way, they've been raising their dividends every year for like over a decade, and their yield is like 0.03% because the price of the stock keeps going up so much.
No, great point. So JC, they're printing money right now. We just talked about how their numbers are just, tripling, quadrupling on the bottom line. So there's going to be massive shareholder return potential there. Whether they do it through an even bigger dividend or more buybacks, we'll see. But I think they just announced another $25 billion.
Yeah, but they did.
So they got the money.
Definitely have the money, right? That's for sure. There were a couple of other, like Splunk, which is in the same space, sort of, right?
Who's up the most in sympathy today? Like, who's up the most
in pure sympathy?
I wish.
Is Splunk or is that their own?
Well, they had earnings, and they're also like I think they're more of a cybersecurity.
It's a software company, yeah.
Yeah, pure sympathy. Marvell, MRVL is up 3.5%.
A lot of them are up 2-3%.
Yeah,
that's basically the sitch.
Yeah, pure sympathy. Marvell is.
But that's not. Winning. See, 2 or 3% is not much. So the thing here, it's like everything's up today, and that's good. I think we have to really watch the action today. Make sure we close up here. Don't give these gains back, because based on the numbers, like the numbers were better than last quarter. The reaction wasn't as good because last quarter was still more of a surprise. But the stocks have to hold these gains, because you would think for the numbers that they put out, Nvidia would be up 20-30% today. So the market's already priced in a lot of this good news.
And we knew that.
Oh, yeah. Thanks for that, Team Money. Super Micro, which is, I guess, an AI play, is up 6%. So there we go.
They have the best name, Super Micro, off the computer.
Yeah. All right. We got Mike Singleton here. Let's bring him on and get his take on this from Invictus Research.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mike, what's happening, my man? Oh, gotta get him off mute.
Oh, the old mute trick.
The old mute button.
Mike, check your mic real fast. Or the settings in. Oh, wait a minute! I just heard something.
Nope.
No. All right. I will.
You work with him
on that.
You work with him,
Mike
and
in the background.
I want to talk about. Can you punch up the hot corner, and then you'll get him on. Let's just do the hot corner quick.
Oh, yeah, I can do that. Where's the hot corner? Right there. Yeah, there it is. Okay. But do we need the bumper?
Yeah.
Sure. What the hell? All right, fine.
Hot corner. So hot right now.
All right. So while Spencer's working with Mike, getting his audio ready to go, we saw in the chat people already talking about the PI purchase. $2.8 million from Celebra Capital on the PI again, Strazza.
Yeah, they've been all over this name, like you're saying again. Look, it's one of these tech stocks that really, if you look at the chart, had like a hole blown in it just last year. It's down. Let's check the drawdown on this one.
Can you throw up slide 1 there, Spencer? Throw up slide 1. This thing back down to those former highs from 2017. This is a big level where these guys are stepping in, right?
It's a strong stock if you zoom out enough, right? So I think you do have a clear level here, 60 and change. You can play it off of there, but they've been buying a lot.
Yeah, look at those former highs from late 2017. See that? And all of that has turned into support. And then, so interesting purchase there continues to come up on different scans, including the hot corner. Also, Energy Transfer, Bradford Whitehurst. Who is this guy, Bradford Whitehurst? Bradford White. Do you know this guy?
Nope.
I feel like you know these guys. So he's a board member. This is the big energy investor. He's worth $5 billion. Just dropped $38 million on the stock a couple days ago, right?
Well, what's interesting is now we have multiple insiders, right?
Yeah,
Buying the same stock over a very short period of time.
that's right. And this guy, Bradford Whitehurst, he's only got a net worth of $26 million, according here to Dr. Google. Benzinga reporting his net worth is only $9 million. So I don't know who to trust here. Either way, whether his net worth is 23 or 9 million, I'm not really sure. $130,000 transaction, kind of a piker purchase, but Strazza makes a good point that you're getting multiple purchases from insiders, and that's a big one. Another thing that stands out, Strazza, more regional banks, man. Like every day, Robert Stallings buying this Texas Capital Bank shares. That name keeps coming up. Speaking of multiple insiders buying, also Byline Bancorp. All these guys are buying all these banks that no one's ever heard of, or that I've never heard of. You know.
All right. What's a Funko?
What's a Funko?
Oh, how is this company still a public company? Is what I want to know. And by the way,
pop culture collectible. What? No, but what is it?
Oh, this is a penny stock. You can't touch this. $300 million.
Funko dolls, man. Funko dolls. They're like they're the dolls with the big heads. You know what I mean?
You're kidding me.
No?
I don't know. I got kids and I've never heard of any of these things.
This is a public company, huh? Wow.
It's not much of one, so
you can't touch it. And then this Cassava Sciences. You guys ever heard of this one? This is one of like these.
Sadly, I have, Strazza.
This is a cult stock, right? You worked at Benzinga. You know about this one.
Right? They had a somewhat sketchy thing happen to them where they published clinical trial results for, I think it was Alzheimer's, I want to say. And then the results of that trial came into quite serious question. And the stock reflects the uncertainty of that, right? So, it's just been a while.
This thing's only 700 million. Stay away from this thing. It actually, this name, it's funny how appropriate. The name of this company used to be Pain Therapeutics, but then shareholders said that it was too painful.
Okay, wait, we got Mike. Can I bring him on?
All right, bring him on.
All right, Mike, you with us?
I am, after some technical difficulties.
Alrighty.
There he is. What's up, my man?
Thanks for having me, JC.
Yeah, anytime. So let's get right into it. We talked about the Nvidia earnings. We talked about some of the insider transactions. We talked about at the index level, a lot of the U.S. indexes are stuck below overhead supply. It's a much different environment today than it was perhaps in the first half of the year. So do you disagree with any of that? What are you seeing out there?
No, I got to say, JC, I think you absolutely nailed the rally from June. I think you're turning the corner at the right time. I got to give props to you. That was you've had a lot of great calls over the last year and 2 months.
Well, I appreciate it. You and Frank were breaking my balls in New York about how bullish I was, remember? So I appreciate that. It's all good. Listen, nice to get one right every now and then, right?
Credit where it's due.
So anyway, like Babe Ruth said, yesterday's home runs don't win today's ball game. So all that stuff doesn't matter anymore. Let's talk about the rest of the year. What are we thinking?
Right. So I think, like I said, I think you're sort of turning the corner at the right time. Over the short run and over the longer run, it's kind of tough for us to be bullish on financial assets at Invictus. Over the short run, really, I think that the $2 trillion in issuance from the Treasury in the back half of this year is going to be, a cause for financial conditions to tighten. I think that's going to be pushing rates up. It's already been pushing rates up. That was the problem in 2022. I think it's going to continue to be an issue for the rest of 2023. And at Invictus, I think we're still one of the few research providers calling for a recession, starting maybe at the very end of this year or the beginning of next year. In other words, we expect the unemployment rate to go up. Historically, that's a very bad economic backdrop for risk assets like stocks. When that does happen, it'll be better for bonds, and it'll be better for duration as a risk exposure more broadly. But in any case, it makes it very difficult for us to be really bullish on a whole lot, except for maybe short-term treasury bills over the next 3 months, and then certainly over the next 12 months.
Mike,
So you think the 10s go to 5%?
So in the bond market, I believe in trends, and I think trends tend to persist. In the bond market, I'm a little more hesitant to assume that trends persist forever than I am in the stock market. Bond market doesn't have unlimited upside, and it also tends to have less downside as well. The level I'm looking at right now is 485. But when I think about the fundamentals and I think about quantitative tightening and the Treasury's issuance schedule, I think there's the fundamental juice for 5% yields. But I probably wouldn't trade with that expectation right now anyway.
But 485 is pretty damn close.
Pretty damn close. Yeah, I agree. I think that the path of least resistance for the 10-year is higher.
All right, I'm taking the other side of that. I started buying bonds. I'm probably going to add to that position. Strazza, thoughts?
Yeah, Mike, what are some of the things that like you guys are looking at that have you like turning sour on the economy in the future? Like how do you predict that so far out? Like I saw this GDP now number. I don't know if you guys pay attention to that. It's like almost 6%.
Definitely not.
And so what kind of things are you looking at?
Right. So the GDP nowcast does not have a terrific track record this early in the quarter. Generally, I think 5.8% is kind of a ridiculous number.
How'd they come up with that? I saw that.
I really don't know. I would have to go through it, but I think that's the U.S. economy is really only capable of producing about 1.5% real growth over the long term. Mm-hmm. So I think the expectation that it's going to print 4 times that, not coming out of a recession, is very unlikely. Yeah. In terms of what we're looking at that make us bearish on the economy going forward, I think you have to look at, you have to look at cyclical, interest rate sensitive, traditionally leading sectors. So I think the first thing that you should do is you should look at interest rates. I think it's probably well known to everyone listening on this podcast that when the Fed hikes rates really aggressively, that tends to precede recessions. Obviously, we've seen the fastest hiking cycle since Paul Volcker in the 1980s. Traditionally, the speed and severity of recessions is commensurate with the speed and severity of the rate hiking cycle that precedes it. So that's certainly bearish. If you look at interest rate sensitive parts of the economy, they're very, very soft. We had pretty bad MBA mortgage data on Wednesday. We saw mortgage applications come down 5% week over week. They're now almost 60% off of their cycle peak in early 2021. That's rough, right? That's indicative of a housing market where demand is extremely soft because no one can afford mortgages. If you look at manufacturing, it's also weak, right? If you look at the ISM manufacturing PMI data, for example, it's still around 46. That's consistent with the beginning of historical recessions. And we also know that the manufacturing sector tends to lead broader measures of the growth cycle like GDP. So that's where we are right now. Essentially, in short, when you look at the leading indicators, they're all still pointing down.
Why don't we talk about, let's play delta neutral. So if you got to be long a handful of sectors, and you could be short a handful of sectors, so playing the relative strength, so you're not necessarily bullish of equities, but not every sector can underperform, right? Which 5 are you buying? Which 5 are you selling?
So on a fundamental basis, I really like home builders. I understand that if you look at XHB, it's right below resistance, and I'm not a fan of buying things right below resistance.
But ITV isn't, and ITV actually has home construction stocks in it. When XHB is like, painting companies and like all the ancillaries.
Right, you got to pick your spots. But yeah, look, I think there's a pretty severe housing shortage in the U.S. People talk about underinvestment in energy, underinvestment in copper, underinvestment in this commodity and that. And I think all of those conversations are fine and that they bring up really good points. But the fact is there's also an enormous housing shortage. And when you look at sort of the leading supply chain data for the home builders, they're not in a rush to bring on new supply. So, even though demand, we could go more into housing market dynamics if you want. But I think that there is a long-term undersupply issue for home builders. I think that that's been one of the reasons that home builders have been a top performer since June of 2022. And looking through the potential recession in 2024, I think home builders are going to be a long-term outperformer. So I'd be looking for spots to buy those opportunistically.
All right. So Mike likes the homies. What else you like?
I don't hate semiconductors, right? I think that the fundamental story for semiconductors is it doesn't make a whole lot of sense. But the fundamental story for internet stocks in 1999 didn't make a whole lot of sense, and they went up 100% in a year.
It sounds like a funny looking recession with technology and consumer discretionary leading the way higher. No.
Well, I think you have to consider that if there is a bubble in semiconductor stocks, which is not unreasonable at this point, you have to consider historically what's the pin that pops the bubble. It's usually recession. So I think that you have to. I'm certainly comfortable being long certain technology names, certain semiconductor names right now, but I think that you have to be careful about risk management, right? This isn't, in our view, a confirmed bull market. So you want that to be reflected in your position sizing.
All right. So you like the homies, you like the semis. What else?
Treasury bills.
This isn't like your mom and pop basic cable news station where like the journalist comes from like True TV and is going to ask you like layup questions. We're bringing you the hard questions, Mike, right? We're not making it easy on you. All right. We're bringing you the hard questions. You're always breaking my balls, giving me the hard questions. So now I'm giving it right back.
I think he just said bonds, JC. JC's been buying bonds too, Mike.
So you like buying bonds here?
I would say bills, not bonds. So I like
bills.
the short end of the yield curve.
We're talking equities. We're talking equities for a second. We've come to the conclusion that you like bills. Great. BIL, great ETF to get that done for you, by the way. Very liquid, pays on time. BIL, nice vehicle to express a thesis if you agree with Mike here. I don't necessarily disagree. But nevertheless, equities, semis, homies. Or if you want, you can tell me the things you don't like.
Yeah, I think that, the way that we think about it is you want we analyze the economy and what the economic data is telling us, and then we try and analyze the market signal and what the market is telling us. And ideally, those two things would be agreeing, right? So when the leading economic data is telling you growth is going to accelerate, and the market is agreeing with it, discretionary is outperforming, cyclical is outperforming, that's when you want to have, bigger position sizing. That's when you really want to be positioned for risk on. Likewise, when the leading data is decelerating and the market is confirming with defensives outperforming, that's when you want to really be positioned for risk off. Right now, the economic data is poor, right? Our economic outlook is kind of negative, but the technical evidence is not completely negative. I would describe the technical evidence as being very mixed. And so, as a result, we don't mind having some offensive exposure. Consumer discretionary, I really have a hard time getting excited about outside of home builders. Technology, I really have kind of a hard time getting excited about outside of semiconductors. But defensives don't look that great either. I mean, there are a handful
low
of
volatility
names.
staples are not getting any love at all.
Right. There's some names that still look kind of good. I mean, Walmart looks pretty good. I think you could look at Is
Walmart really a staple though? Smells discretionary.
You think so? Walmart's like the biggest grocer in the US.
Isn't Walmart a place where you go buy shit? Like all kinds of shit you don't need?
Usually, I don't know. Usually I'm buying staples at Walmart, but they do have a lot of stuff. So maybe there's some discretionary mixed in there.
Both, yeah.
Yeah,
what about the theory? I want to hear your thoughts on this. You're a smart guy. What about the theory that the reason we're not getting rotation into utilities, consumer staples, low volatility names, perhaps to get that yield is because you don't need to go there to get the yield. You can just buy your bills. You buy that? I feel like I don't buy that.
I think there's probably some truth to that. When I look at different back tests, what economic backdrops do defensives really tend to outperform? They tend to perform best when economic growth is slowing and Fed policy is easing. And right now you have some of that, right? You do have economic growth slowing by most measures, but Fed policy is very tight. And so the reason that matters is because a lot of these cyclical exposures, consumer discretionary and technology and whatnot, there's a lot of interest rate sensitivity. And so anyway, that's kind of mixed up the data. And we've also seen kind of unusual policy dynamics in the first 6 months of this year or so between the Treasury General account drawing down and the Fed expanding its balance sheet. And so I think that's confused some of the traditional risk on, risk off dynamics between cyclicals and defensives.
And energy?
Look, I mean, energy is not trading like there's a recession. And I think oil services, I actually should have mentioned that earlier. Oil services I just think you can't ignore the relative strength. It doesn't
Those
really
offshore
make
drillers ripping, man.
Right. It doesn't really make sense that they would be doing so well at this point in the cycle after, 12 consecutive months of inflation declines. But I think when you see relative strength like that, I think you have to own some of it. So we've actually been getting long oil services as well. I should have mentioned that earlier in the conversation. But yeah, I mean, absolute standout performance, I think.
All right, last question and the most important one. How many wins for Notre Dame this year?
10.
Wow.
Oh,
10
boy.
wins.
Oh, boy.
10 wins. Okay. I doubt it. I'll take the under.
I got to stay optimistic.
Oh boy, we appreciate
We
that.
appreciate
Mike
that,
Singleton, senior analyst, Invictus Research. Thanks a lot.
Thanks, Mike.
Thanks, Mike.
I'm not going
All
to
right,
take it
cool.
easy on him. All right. I know we're friends. He's a nice guy. I'm not just going to throw him alley-oops, right? Right? The audience doesn't want that. For that, you turn on your basic cable. This is is real. This is real journalism, asking the tough questions.
Well, yeah, you have to ask because he's saying, well, I see a recession coming, but I'm buying home builders and semiconductors. What kind of shit journalist would you be?
Right.
If you didn't push back a little.
I'd be, most of these journalists are shitty anyway, so you're being redundant.
All right, let's bring Kimmy on. I'm dying to know if she's getting down and dirty today in Nvidia. Let's find out. I hope
I have a
she
funny
is.
feeling.
Let's find out.
Ask her if you could.
All right, Kimmy. Is Nvidia forget today, just generally speaking, is Nvidia traditionally a good stock to day trade or is it a bad stock to day trade?
No, it's great. It just trades very wide. So a lot of people, it trades within 10, 20 points a day. So it is a very hard stock to trade.
I hate to say I told you so, Strazza, but
No. You're both kind of right in this situation.
Kimmy, he asked the question wrong. As a general rule, would you rather trade a stock that has a lot of news around it and a lot of headline risk and stuff like that? Or would you rather trade a stock that is sleepy and quiet and doesn't have a lot of news?
Sleepy and quiet.
of course. What does the judge say? You're leading the testimony here.
The witness.
Yeah,
You're leading the witness.
Last earnings in Nvidia, the last time I reported, I did short it.
You did. Successfully, by the way.
I remember
Hold
that.
on. As somebody who doesn't like to trade the day after earnings, here we are taking a victory lap on the last time that Nvidia did this. You faded it successfully. Do I hear encore? Are we fading this again?
It's like, they could push this up to 520, 530. I mean, listen, it's up. I don't think it's spectacular. I don't think it's like wowzer. It's, for Nvidia.
It's not wowzer. This isn't wowzer.
Last time it gapped up more, didn't it?
Yes.
Yeah, she's right.
It gapped up more. So, listen, maybe this name goes to 600. I mean, I don't know. Maybe people just jump in and start buying. I would think some of the smart money is trimming a little bit.
So you're coming into today looking to fade Nvidia if you get the opportunity.
If I get the opportunity, I don't even know if I'll touch it. I'll see. Last time I did successfully. Maybe it pulls back down to like 480, 490. But I have to see, how far they want to push it. Are people going to jump in? Like, doesn't mean they're going to sell all their position like the big fund managers, but they might take some off the table.
But you're not looking to buy it.
No, I'm not going to buy it.
You're not looking to buy it.
I recommended
you either do nothing or you short it.
I recommended it this week, saying a potential it could go to 460, and it did. It kept going, obviously, but I said to the room, if you had an interest trading it, when it was like 440 to 444, I said, you potential up to 460, like a run up before earnings. Obviously, it went higher, but it was a nice opportunity for people in the room. But
a lot of people in the audience are saying that Kimmy is too humble. Let's reiterate how yesterday went. 5 for 5. Baidu for a profit long. Dix long for a profit. Microsoft long for a profit. Google and Roku all longs. I bought Roku at 820, so I was an impatient woman, but did I love your notes. I was an impatient woman.
I am. I tell
5 for 5, Kimmy. Pretty good.
So Roku is being annoying. It went. The second, of course, I'm like, you know what, guys, I'm getting out. Made 2 cents, break even, whatever it is. And I said to everybody, I was like, listen, guys, and people stayed within the room and successfully traded it. I was like, guys, I'm too impatient. I'm like, it just won't go.
Oh, what about hold on? What about the 3M? I'm really interested in this because 3M is at a really interesting level. It's in your morning note today.
Mm-hmm.
I mean, man, I'm looking at this from the long side, Kimmy.
Right.
What?
Yeah. Could it go lower? Of course it can. So, you just keep a stop in place. I'm looking for a trade in it. Maybe it gets up to 101, 102. We'll see if it gets going or not. We have big gap up today in a lot of names. I think it's going to be a little bit harder to trade because it's like, I don't know if they're going to fade names. Like I have a list here. I have like 8 names I'm looking at. And it's going to be very hard to see if they have gaps above and gaps below. What's going to come first? So I think it's going to be a difficult, like a little bit of a difficult trading. I think we have some speakers in Jackson Hole starting today. So we might have some volatility. The big one is tomorrow, Powell, but we could have some whips in there.
Can you imagine you show up in Jackson Hall, it's this beautiful place, like just amazing. And then all these economists are there to ruin the party. Oh, sounds terrible.
I have been to Jackson Hole once in my life, and it was absolutely stunning and beautiful. Beautiful
Fantastic place.
I
Better
went
without the economy.
in Yellowstone.
All right, guys, if you want to actually trade along with Kimmy, she's doing it in her room every single day, and it's there. The link is on the screen. The link is in the chat. The link is in the description. Check it out. She's yesterday 5 for 5, as we said, crushing it every day. And she discusses her trades, and she announces her trades as she's doing them. You can watch her do it, follow her in, do the whole thing, and replicate this because it's working.
Thanks,
so
guys.
Good job, Kimmy.
Right,
Keep
Kimmy.
up the good work.
Have a good one.
Bye, guys. Have a good one.
Kimmy, reiterating Nvidia is solid stock to day trade.
She loves to get down and dirty in, like, she traded Dick's Sporting Goods, which was 2 days ago now, was down like 20% in one day. She loves getting down and dirty.
You got long
these earnings, these post earnings moves. I love it. Yeah.
Well, she's mean reverting, right?
Yeah.
So she's not going to short Dick's. She went long Dick's. In the case of Nvidia, ripping higher. She's looking to fade it, right? She's not looking to buy it, right? Like that's how she rolls. Makes sense.
Yep. Okay. Just moving along here. So yeah, Nvidia is going to be the story of the day. A couple other movers to make note of. I think these are all earnings related. Petco, which has one of my favorite tickers, Woof, down 17% this morning on their earnings report. Guess up 17% on their earnings report. Very interesting dichotomy. Actually, I think this feels like it's normal in retail. There's always the haves and the have-nots. You're seeing some horrible reports in Foot Locker and Dick's Sporting Goods, and some very nice reports in Guess and Abercrombie and Fitch and a few others.
How about that Abercrombie and Fitch chart? Let's get that up.
I think we had it. We have it yesterday.
Yeah. Look at this thing. What a beast.
Yeah, and yesterday was a great day. We haven't talked about this in years. It's not deserving of it really, but yeah. What was it up yesterday? Like 20%, something like that.
Slide one.
Something crazy.
Slide one. It's in there.
Yeah, I got you.
This Petco is a disaster.
Yeah. So anyway, so like you might see headlines, and I've already seen a few of them that are like highlighting all these weak reactions or these poor results in these retail stocks, and saying, "Oh man, the consumer, they spent all their excess savings, they're getting weaker." It's hard for me to buy into that because for every retail loser, there's a retail winner. I mean, look at this one for example. So hard for me to.
No, you're right.
To buy
right, and it's that kind of space, and it always will be to a degree.
And these names, Abercrombie and Fish, Guess Jeans, like what year is this?
2000.
I mean, wow, Guess too. Just
I know, 17%.
I follow this Twitter account. It's like the 2000s, and it's all just like memes from like like Britney Spears looking all hot and stuff like that before she, went crazy or whatever. It's all like early 2000 stuff. It's actually pretty funny. I feel like this is like should be part of that Twitter handle.
Definitely.
Massive base in American Eagle Outfitters also.
Oh, yeah.
Just, from what I know, this might be some sort of sympathy trade for Abercrombie and Fitch. They have earnings coming up. Could be the catalyst to get this nice reversal pattern.
The stock's still AEO. Geez, the fact that I know that is
I know, me too. I just had the same thought.
American Eagle Outfitters.
American Eagle was the only one of these stores that I ever really shopped at.
I never wore any of this stuff. I was more hip hop. You know what I mean? Like I don't need to like pay extra for clothes that look old. You know what I mean?
You shopped at like FUBU instead?
I did not shop. Does FUBU even have stores? I don't think FUBU has stores.
I don't know. I don't think they do.
I was more like hip hop, more like sports.
Yeah.
But like think about it. I just never understood like what you're gonna pay more money for the clothes.
Foot Locker.
I don't know.
You were Foot Locker and Famous Footwear. That's what you were.
I was a Foot Locker. Yeah. I would shop at Foot Locker back in the day, of course. And there was another one, Champs. Yeah, right.
Oh, Champs. Whatever happened to
I have no
Champs?
idea.
Mark Knoller in the chat. ANF is different than it used to be. I mean, I hope so. Please tell me more.
Yeah, Stussy, Rusty, some of that stuff back in the day, a little surfer-ish. Yeah, that was me. Yeah, it was more like surfer hip hop, not so much like expensive clothes that look old. Right?
I played sports.
I did play sports.
I didn't wear Abercrombie.
Did you wear Abercrombie? I mean, you're from Connecticut, so you guys with your whales and shit, right?
Of course I wore Abercrombie. Yeah. Everyone wore Abercrombie.
You know how like the people in Connecticut like to wear like whales on their belts and stuff like that. You should have seen how excited me and Strazza are walking in around New York City, and there was what's that store? The Vineyard Vines.
Yeah.
Strazza starts going off about how excited he was that they have a Vineyard Vines. It's a very Connecticut moment.
Yeah. Well, I get excited for Connecticut.
As you should. We should all get excited for our home states. You guys want to do a chart report
Let's
real fast?
do it. Hell yeah.
All right.
All right.
Quote of the day.
Yeah.
Quote of the day. Check this out. This is from the CEO of Nvidia. Software is eating the world, but AI is going to eat software.
Dude. So this is great. Pat is awesome.
Pat does a nice job with these quotes.
He's so good at this. He's been saying this, and analysts have been saying this for 5-10 years now. This AI thing has been the plan for a long time for this company. They just started making money off it like this year. I was like looking at, the stock went from like 100 billion to 800 billion just from the COVID lows. So the market's been pricing this story in for a long time. It's not like we just woke up in 2023 and all of a sudden AI is this, superpower, and Nvidia is leading the charge.
Can we scroll down to this Larry Tantarelli chart? He's showing the inverse correlation between rates and ARC and Qs, something we talk about here a lot. With the upside pressure in rates, that's going to put downside pressure in these high growth names like ARC being the poster child for that group of names. QQQ, of course, to a larger market cap degree, but nevertheless, look at interest rates going up and those others going down. I mean, that's why we look at bonds so closely, even if we don't trade bonds. I mean, in this case, I do have a bond trade, but even if I wasn't, it's still very relevant.
We are talking a lot about all this overhead supply. We're still on the chart report, but it speaks to Larry's charts here. Throw up 5 and 6 real quick. Like JC, the fact that these two things are happening together, we're talking about these former highs and trying to break through these resistance zone, particularly for tech stocks, growth indexes, right? And now, if you go to the next chart, Spencer, right? So Apple looks like this, and it's not the only one. This is just an example of a lot of the theme that we're seeing in a lot of charts right now. Is this the catalyst to break these things out?
I not only think it's the catalyst, I think it's necessary. I don't think I don't think the Nasdaq's going to break out and technology is going to break out with interest rates breaking out. I don't think that's happening.
I was having the same kind of debate in my head this morning. I don't think it ruins everything, right? If rates
be a fly on the wall in a debate inside of Strazza's head.
Okay, so and here's how the debate ended, right?
Who won? Did you win?
It's a lot easier to be bullish if rates are resolving this range lower than higher.
Yes.
And it's even easier to be bullish if they're still stuck in this range, I think.
Sure. I agree wholeheartedly. And I'm long bonds because I think rates fall. So there you go.
Yeah, but wouldn't you rather be long stocks?
No. I would be long stocks if I'd rather be long stocks. Now, wouldn't I? Which stocks, for
It's
example?
a tough one. It's a tough one. I'll invite
It's
you
a
to the next debate in my
very
head.
risk versus reward trade in the bond market that I'm looking to add if we continue strong into the end of the week.
Yeah.
I have a decent position, but not anything that's going to change my life. Would I rather be long stocks? No. I mean, look at today. Huge gap up in Nvidia. Nvidia's barely up. You know, Apple's down. Microsoft is down. Technology is where's tech now? I mean, technology is up 80 basis points. I mean, granted, the market just opened. Let them dance. I don't want to overspeak here, but I mean, the Nasdaq's up 60 basis points. Everything else is down.
Listen, already it's 9:33.
Yeah,
so
agreed.
I'm not trying to jump the gun here, but the candles already, we're steadily moving lower here right at the open. If you get some big, nasty, solid, God forbid, red candles today following yesterday's report, not good, right?
No.
This is going to be the best news that tech stocks have and the broader market has for 3 months. This is it.
Yeah, no kidding. By the way, I love this tweet. I love tweets that or anything that pokes fun at news headlines. So this is just a nice one from Matt Weller. Add ahead of Nvidia results to every headline you write, and it makes it more compelling, right?
It's true though.
Yeah, but these headline writers, remember, like they've never traded a stock in their lives. They didn't take finance classes in college. These are journalists.
It's a totally different. There's a
reason they sound dumb, and they sound so dumb, and it's not because they're dumb. It's just ignorance. It has nothing to do with intelligence. They just don't know anything.
It's easy for people to sit here and poke at these people for what they do. I've been writing the subject lines of this Nvidia note for almost a year now. I get it.
I've been an editor I was for many years, at a financial news publication. I was in the belly of the beast, and so I empathize with this tweet.
And Spencer's a good example. Spencer came from the MLB network, right? Finance pays better,
but I wasn't,
right, Spencer?
Yeah, I wasn't writing anything for them. I was helping them make their highlights.
You certainly weren't playing there either, right?
That's for sure. I got some funny stories about those people. Anyway, okay. 9:34. We're gonna have Sean McLaughlin here in a sec. Talk about this options trade in Microsoft from yesterday. What else was? Oh yeah. By the way, before I forget, chart report, guys. Free daily note. Okay. Let me drop the link in the chat for you and bring it up on the screen. Goes out every single day after the close, and Pat does a great job of just compiling the best tweets from around the world of FinTwit throughout the day. Really and good. It's like, so at this point in my life, I'm getting, I probably get 6 or 7 daily market emails, right?
Is that it?
And daily? That's a lot, dude, man. I feel like
my inbox is ruined by these.
Are you kidding me? Come on, Spencer.
Anyway,
you're here complaining about 6 or 7. Jesus.
I think that's
amateur
a lot.
Hour.
But all right,
Strazza, tell them it's amateur hour.
All right, it will ruin your email.
My point was this is among my favorites. It's one of the ones that I actually always open. I don't always open all of them.
Guys,
and maybe I'll do a true accounting of it to see how many there are. It's not more than 10 though. Anyway, there's the link up on the screen and the QR code. I'll throw the actual link up here, right there. There it is. Right. So got the chart report.
This Rourke Capital. Have you ever heard of it before?
Yeah, I do know them. I remember them. The only reason I remember them is because in the span of a couple of years, they went and they bought out Buffalo Wild Wings, and they bought out crap. Who was it? Buffalo Wild Wings, and was it Arby? No, yeah. Well, they own Arby's too, but they have like a fast food empire over there.
So how long have they been around for? Because this is impressive. They're huge.
It's private equity. I don't know.
I don't know how I'm just hearing about this, but this is like 40 billion. Arby's, Baskin Robbins,
Yeah.
Auntie Annie's, those delicious pretzels, Buffalo
Yeah.
Wild Wings, Carvel, Carl's Jr., Hardee's. They own Cinnabon.
Yeah.
Dunkin' Donuts.
So
I mean,
that's who it was. It was Dunkin', and then Dunkin'
They
re-IPO.
bought
That's
Dunkin'.
right. Okay.
No, but Dunkin's still private.
Orange Theory, isn't that like
Oh, it is still private. Okay, right. So they bought Dunkin'. Yeah, and then somebody else. So there's two of these guys. There's
Which
another
one
one
bought
called
BK?
Jad.
There's a BK one.
Sonic?
That's no,
Miller's
no.
Ale House.
BK's QSR. They're public. There's another one of these private equity food giants called Jab. They're the ones that bought Panera and a few.
I was just
others
out of
as
Panera
well.
Bread 2 days ago. How about that, huh? JC hits the Panera Bread.
All right.
This is-
Anyway,
I guess my point is this is like
It's nice.
this is like one of the biggest like restaurant conglomerates. McDonald's is bigger, Chipotle is bigger, and then these guys. Like they were,
and
they're
the
public.
reason you bring it up is because they're trying to buy Subway. They may not.
What about Yum Brands?
Um,
That's a big one.
It's big. This is bigger.
Really?
Sam, I'm not an encyclopedia of fast food knowledge. I just remember when when things get taken over, right?
This is where Spencer goes for lunch. He rotates amongst
It's
Dunkin'.
not. I don't want to give him all this vibe that I know everything about fast food.
You seem to
restaurants.
know a
I don't.
lot, Spencer. To his point,
Oh gosh.
All right.
you are
and
our
also,
in-house fast food correspondent, Spencer Israel.
I've been reading up on the Subway thing because it's up for sale, so that's how it's brought back a lot of these memories for me. But
Their
anyway,
brands
okay.
generate approximately 80 billion annual revenues. It's a massive company. Fast
It's a
food.
shitty restaurant business. A shitty business though. Bad margins.
I mean, they must be scaling something with buying all these
business.
brands. I mean,
Are you trying to open a restaurant, bro?
never. No.
Zero chance.
It's like the boat thing, right? You want a friend with a restaurant. You want to know chefs and managers at restaurants.
That's right.
You want to know?
That's right.
I don't
You
want.
want a husband that can cook, right? That's why my wife, she won the lottery, getting me to make dinner every night. You know,
Oh, yeah.
lucky her.
You're lucky she doesn't watch the show.
I tell her she gets a lot of shout outs in the show. She's like, "Why are you talking about me?"
All right, you guys want to bring on Sean?
Bring him
Should we
on,
do
bring him
some option stuff here?
Bring them on.
All right, Sean McLaughlin. Why does that always happen when I do that? That's so annoying. Sean McLaughlin, All Star Options. Where's his bumper? Come on now, let's go.
Come on now.
Listen, JC, you've said a lot of outlandish things over the years, but your wife winning the lottery, that takes the cake. Come on now.
That's a good one, right?
I think you got that backwards, my friend.
Am I the one that won the lottery?
I think so.
Wow, I am a lucky man. I will say that. But I make a mean dinner Shawnee. I do. You know, I work hard during the day, and then man, I can hook a steak up nice.
Well, now that I think back over it, JC, I've known you since what, 2009, I think is when we first met.
Sure.
And I'm trying to jog my memory, and I don't believe I've ever had a meal prepared by one JC Parets. So we need to fix that.
All right, well, come on down. You know, we could do all kinds of things. I try all kinds of recipes. I had a lot of time on my hands before kids, Sean. A lot of time.
Oh,
and I
I
lived in California when the market closed at 1. So I had all afternoon to try all kinds of ridiculous Asian
That's
recipes with like 200 ingredients. Like, you know, I messed around a little bit.
You know,
And I saw what happens.
as good as you may be at cooking food, I think you're still better at ordering it.
I am pretty good order at food. I must say. Yes, those of you who have had the experience of sitting down and breaking bread with me, I have. That is a good skill.
I don't know, Strazza and I had a pretty good method of ordering food in Asia. We basically just said, give us everything. and it worked.
One of each
All right.
is not a strategy.
All right. Speaking of strategies, we are incorporating strategies these days that we certainly were not incorporating in the beginning of the year. Very, very different environment. We're coming into our conversations about trades we're putting on with the mentality of selling something, maybe using that money to buy something, but definitely selling something and collecting premium, when it was the exact opposite. At the beginning of the year, it was like, let's buy something and go out as far as possible because it's so cheap, right? Just a different environment. Yesterday, Sean and I, and listen to this. This is how messed up this world is. These people doing things behind my back. This is what happened. Sean comes on, me and Sean, I'm like, Sean, we're selling something. He's like, hell yeah. I'm like, I like selling the Microsoft puts, 310s in October. He's like, yup, we agreed, like right off the bat. Then Strazza joined us, and I'm like, Strazza, you're gonna love this trade. He's like, what do you got? I'm like, we're selling puts in Microsoft. He's like, I like it. What month? I'm like, October, 310s. He's like, ooh, I like this. So we're all on the same page. We're selling our puts, moving on. I hang up, and next thing I know, not only is Sean selling the puts, he's also selling calls behind my back. Can you believe that shit? Can you believe that?
I like it. I'm into it, Sean.
Listen, it's still the same trade. We just added a little call kicker, a far out of the money call to bring in a little extra premium. It's still the same trade. It's still going to have the same, mostly the same result.
Throw slide one there, Spencer. Throw slide one up.
The only real difference here is if the trade doesn't work, if Microsoft sells off, by selling the calls, I'm going to lose a little bit less. That's it. Because if Microsoft rallies hard, it's going to have to really rally hard for me to get hurt in this position. I'm not saying it can't happen. Of course it can happen. But more or less, it's the same trade, JC. I just wanted a little more premium, a little bit more protection. That's it. That's it. Still the same trade. Don't get your feelings hurt, buddy.
I didn't know that you were going to go ahead and sell calls also. I didn't see that coming. We all agreed, we're like the we're like the wolf pack, right? First it was just me, and then there was Sean, and then there was Strazza, and we were the wolf pack, and we all agreed. And then you go on and just go out on your own, going rogue, selling calls too. But listen,
I gotta bring a little Shawnee flair to the table every once in a while. I gotta make it my own.
You heard
that hair, you got enough flair going on. But I just want to reiterate to the audience that is listening here how important it is to understand that literally me, Sean, and Strazza all agreed wholeheartedly on this trade, and we all did something different about it.
Yeah.
And
happens a lot.
There's a good chance that all three of us will win on this trade. How about that?
And all three could be wrong also.
Yeah,
for sure.
So there's not necessarily one single way to do this. There are different ways to do this. It's more the mentality of volatility is elevated. Let's sell something, right? I just like the puts alone. Great. Sean likes selling the 310 puts. Why don't you throw up slide 2 so you can see what Sean's trade is? Sean's trade is another layer. Mine's very simple. Selling the 310 puts, collecting 550. When we can buy it back for 275, we go ahead and do that. Simple. At any point, Microsoft closes below 315, all bets are off. Simple. Sean, on the other hand, a little bit more complicated, more cushion to the downside if Microsoft starts selling off, but the risk of Microsoft ripping would also be a negative for Sean's trade. If you're just selling the puts, Microsoft could rip to 1 million tomorrow, and that would actually be great. Sean is really betting more so on nothing happening, while I am betting on just it not going down. It can go higher. It could do nothing. Sean's more like just do nothing, right? How'd I do? Is that about right?
Yeah, buddy. I just wanted to kind of hang in this range. I wouldn't even mind a little upside. We got a lot of room on the upside.
It's not that fast.
What's that? Just not that fast. We don't want it to go that fast. And look, I didn't just pick that 370 strike out of thin air to sell calls. I very deliberately picked that strike because that is beyond the high price that we saw in Microsoft earlier this summer when it temporarily peaked out. So not only would Microsoft have to move higher, but it would have to move through some overhead supply to put those calls in trouble. So
I will say I'm a little surprised that you got that much for those calls too.
yeah, I mean, dude, I looked at it and it looked like free money. Now, I hesitate to say the word free money because that's a loaded thing to say, but it felt like free money to me. That's why I did that. And like I said, it'll give me some protection if we're wrong on the direction of Microsoft and it does continue to fall. It'll soften the blow, which is a good thing.
Yeah, I hear that. Why don't we talk a little bit about the environment, just sort of in general? Obviously we're going into this market looking to sell things, looking to collect some income. What are you thinking about here just generally, over the next 4 or 5 weeks or so as we finish up Q3?
Well, for the past week or so, and I'm thinking over the next few weeks, is I'm definitely more on the hunt for delta neutral type options trades, premium selling trades. I'm still open. Look, if a good chart presents itself and there's a good opportunity to take a directional bet, I will do so. But my mind is kind of the default mode right now. Is the first thing I'm looking for is where can I sell premium? Because as this, are we calling it a correction? As this correction kind of sorts itself out, I expect to see some sloppy
Would you not
action.
call it a correction? What do you call it?
I mean, I'm calling it a correction, but you're very particular about your terms.
This is a correction. The market's been correcting.
Okay, all right, then we agree.
Call it anything else would be irresponsible.
Anyway, I feel like until we get a better a sense of where the direction is headed, which I don't feel like we have a good sense right now. I feel like we're just going to go sideways for a little while. In my opinion, delta neutral type bets and collecting options premium feels like the right move, at least on the short-term horizon here over the next couple of weeks.
Are you getting some leaves changing colors back there?
Good. It's very observational of you, JC. There is a tree outside my window. For some reason, every fall, it's the first one to change colors. It gets way ahead of everybody else. I promise that's the only tree in the neighborhood that does that. It's weird.
So the trees behave through seasonals as well. It's not just the stock market.
Can you imagine? Amazing.
Wild. Not a lot of changing of the leaves down by you there, Strazza?
No, none of that.
Palm trees aren't changing colors?
Nope, never that. We are getting a lot of rain this time of year, though. Hey, I don't love this price action. Now, I don't want to sound like an alarmist. I know it's only $9.50. I hate the time that we have to do the show sometimes.
Price action in what?
Look at Nvidia. Look at
Nvidia. I was waiting for him to bring it up. Yeah. Don't look now, but really the stock's been trading down pretty much since the 4:30 yesterday, or I guess
sell the news, boys. Sell the news.
4:45
again. The numbers they reported that stock can't close lower today.
Can we just talk about that 50 point straddle? Those volatility sellers just made a fortune, huh?
Yeah. Yep, they did.
Calling it now. You're going to see if Nvidia does continue to do this today. The headlines are going to be sells off on China concerns, because they did talk about their concerns about U.S. regulating sales of Nvidia chips to China. That is a concern for them.
Can we just all agree that if you're getting your information from journalists, you've already lost?
All right. Before we lose the plot,
Spencer, you're right. Just to that point, like, you hear a lot about companies and exposure to China, and 90% of the time it's bullshit. Like, you always hear like Caterpillar, that so much China. It's like 5 to 10% of their sales. It's not a big deal. Nvidia has I think 20% of their sales.
It's big.
People are putting China at. It would be material, right, for them to lose China, and it seems like they will. But it should be priced in, right? I would think people know this.
All right. Before we lose the plot real fast, if you want to get access to the trades that Sean and JC make, before they talk about it on this show, because they made them yesterday right now, so trade's already on. Use the link that I'm dropping in the chat right now. There's also a link in the description, and I'll throw it on the screen too. there as a QR code. There it is. If you use that link and use that QR code, you'll get alerted to this trade when it actually goes down, not like the next morning, right? So you'll actually be a little bit ahead of the game, and hopefully that can help you out in your trading. So there it is. Because Sean and JC are doing this every week, putting trades on, and you can get alerted much more quickly than you would have if you just watched this show the following morning.
So,
Right.
Yep. What do you got, JC?
For recess, hit the bumper.
Oh, no. Really? All right.
No. Well, I mean, we could, but Strazza, what'd you have?
I was going to talk about Bitcoin.
Well, we'll make that your recess.
I think at this point we could just save it till tomorrow. You know, tomorrow's Friday.
Go.
All right.
Tell me about your Bitcoin. You buying some?
I mean, are we digging in here at 25? Former resistance turning into support again?
We are not doing anything. Bitcoin might be, right?
You know how I talk about my stocks, okay, and my cryptos.
I
am at 25 right now.
Bitcoin right now is not my problem. It's not my concern.
Same team.
It's a mess, man.
Strazza, I have a question. When you talk about your sports teams, do you say we?
Yeah, this is
we.
Same team.
Okay, I'm just wondering. Okay,
it's we.
Yeah, I do too. Me and Sean, we talk about our Dolphins, our Hurricanes. You know,
AC's just cold as ice when it comes to stocks.
Yeah.
You know, you won't identify with any of them. You ever just like love a stock and just own it forever? No.
No. Oh, who would do such a thing?
Warren Buffett.
It's a personality flaw of his.
All right.
I'm in the dating business, bro. You swoop in and then you get the hell out of there.
Another good reason your wife doesn't watch this show.
Now, I'm loyal when it comes to friends and family. You know, sushi restaurants. I'm loyal to the things that are important. I don't need to be loyal to the stock market.
Wait, Bitcoin. Back to that.
It's a mess. What do you
What
like?
was the?
What are you doing here?
What?
25,000? Is it digging in? It could.
Man, why can't we trade options in Bitcoin yet? Man, I would love to be selling premium in this thing right now.
I know, bro. The day will come, Shawnee. The next cycle.
Yeah.
Big bear flow today
Next.
in the indexes. IWM coming up on our unusual option scan right now.
Wow. That's random. What's the trade?
Buying October puts.
Wow.
20, 176.
That could be a hedge, though, you know.
Listen, we don't usually see it in this size. Rarely will you see the indexes pop up on our scans.
Did you say 176 puts?
Yep.
I'm seeing it at 177 also. They did two of those. 51,000 have traded at 76 and at 177.
Yeah, the one that popped up, it looks like 45,000 contracts here at 247.
Could be a hedge, as JC said.
I want to talk about Chart Summit. Working on a potential Chart Summit in Napa.
Ooh.
May?
Wait.
With
May,
Kyle?
June? What do you think?
Are we hanging with Kyle?
Next
Yeah.
year, next
Wait,
spring,
so
next summer.
it's not in September anymore?
No.
No. September, we're doing a virtual Chart Summit now. I'm talking about live in person. Takes time to plan, Strazza. What do you guys think? You guys want to do a little chart situation in the mornings and a little wine tasting? How you doing in the afternoons? What are you guys thinking?
I'm bullish.
You like that, Strazza?
I've
I love
never been
there.
there.
You know that. I would love to go back.
Yeah.
What do you think? A little Napa Valley? You guys in? I'm thinking that's what we do. You know, we've got some connections. I got the best taco truck in all of the valleys
When you can
on
find
speed dial.
Speed dial. I don't have phones.
We can get El Duderino to come to wherever we are with his truck and just sling tacos to everybody. What do you think?
You know, it's a good story, so I'll tell it. I've never seen JC more upset. He doesn't get upset easily. Than when we went all the way. Was that Sonoma?
It was in Sonoma, yeah.
Yeah. We drove all the way to this special taco truck and it wasn't there. You should have seen the look on Jason's face.
I was heartbroken.
Yeah.
I was heartbroken
I will-
for multiple reasons, Strazza. Number one, I wanted you guys to have these tacos because they're so good. So it was like I wanted you guys to appreciate it. And then you guys, not forgetting about you guys, just me selfishly, I wanted the damn tacos too. And I didn't get to show you the tacos. I didn't get them myself. Perlman's had those tacos. Giancarlo's had them multiple times.
I'm bullish on any
Okay.
tacos prepared by a man that you call El Duderino.
Duderino.
Yes.
Yeah. Okay. There's a
Bye.
question in the chat. I want to ask you, JC. Tactical Spray asked this. Good question. What is the secret to ordering well at a restaurant?
The secret to ordering well at a restaurant? Well, first of all, you got to know where you are, right? You got to know where you are. You're not going to order the caviar at the Cheesecake Factory, right? You know, you're not going to, right?
Okay.
Understand, are you at a brewery where you should be getting like, you know, burgers or wings or something like that? Are you at a fancy restaurant where ordering the chicken nuggets would be silly? Like, know where you are. Like, if you're at just like at a beer bar and you're going to complain about the wine list, like you're just a very confused individual, right? You know, you're shorting stocks in a bull market. You know, you're selling premium when volatility's low. Like you're just doing it wrong. So just know where you are and act accordingly. And there's some derivatives as well. Like just because you're at a steakhouse doesn't mean you need to eat the steaks. In fact, a lot of steakhouses have great seafood, excellent seafood. It doesn't work the other way though. If you're at a seafood restaurant, if you get the steak, don't be upset when it's not very good because you're at a seafood joint. So it doesn't work both ways. So I think a big key is understanding the environment that you're in and then acting accordingly as opposed to just forcing your order down every restaurant, whether they have it or not.
You know, my wife and I employed a tactic in New Orleans one time, which I'm not saying it's the best way, but it was a pretty damn good way. We went to all these restaurants in New Orleans. We didn't go to the tourist traps. We went to we asked like the hotel concierge, like, hey, where do the locals eat? That kind of thing. We went to all these locals restaurants that you probably haven't heard of. And every time we sat down, they would hand us a menu and it would all be in Creole gibberish. We didn't understand what any of that stuff was. We would hand the menu back to the waiter and say, what would you order if you were hungry?
100%.
And the guy would say, bloom, bloom, bloom. We'd say, great, we'll take 2 of those. And we
100%.
had some of the best food ever that whole weekend when we were in New Orleans.
That's right. Ask the waiters if it's your first time. Ask them what's good here. What should I get? It's my first time here. 100%. Yep. And then same thing with the sommelier. If you don't know what wine to order, bring them over. Bring them over. Or her. It's usually a dude, but bring them over.
But don't go to a restaurant with JC where there is a sommelier, because if there is a sommelier around, JC and the sommelier are going to start nerding out for about 2 hours. You're going to be not even a part of the conversation.
The problem is that usually somebody at the table tells the sommelier that I'm a sommelier, so then that gets me in trouble, and that's when the nerding happens around. The idea, if you're a somm, you don't have to tell them that you are. The questions that you ask gets you far enough where they know that you're not messing around, and then they start showing off. They're like, hey, try this, and you end up getting some free stuff.
When he gets tired of talking like sports and markets, he'll just ask for the somm and then start talking to them about wine. I got
one of those 3 things.
Well, real quick, one of our biggest fans, most loyal viewers, big birthday today. Happy birthday, Dad!
Wow, Uncle Steve,
Mr. S.
Big happy birthday. All right, shout out. We won't ask how old he's turning.
Can we talk about how when we were on our trip last month, Strazza would check in with his dad every once in a while, and his dad would consistently report back to us that, son, the morning show just ain't the same without you.
That's great. We appreciate the kind words.
Strazza's mom thinks I curse too much.
She's not wrong.
No,
I'm working on it.
My dad's
I get very enthusiastic. I forget that we're on video here, not in a dugout or a locker room somewhere, you know?
Yeah. All right, everyone. That'll be a wrap for us. As far as what's coming up today, we got jam session. Sean, I'm calling it. We're doing it. All right. Noon Eastern. We got Chart Request Live at 1 o'clock with Strazza and Pat. And don't forget, as always, follow us on all the the great socials. We're on all the socials. We appreciate that. Hey, subscribe to our channel. We'd appreciate that as well. Drop us a like if you'd be so kind. Thanks to our guest, Mike Singleton. Thanks to Sean. Thanks to Kimmy. Thanks to all of you in the chat. We'll see you guys later. Go make some money.
And Chart
Adios.
Request Live. Chart Request Live this afternoon.
Woo!
1 o'clock. Go do it.
Take care.
Peace.
Run it. I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah,